Should you buy Hong Kong stocks or Hong Kong ETFs now that the coronavirus has basically dissipated the protests there? I don't know, but the man to my right does. Kim Iskyan, thanks for joining us.
Thanks, James.
And let me go straight to that question. Should American investors or investors outside of Hong Kong be investing into Hong Kong now that this is happening?
James, I think that's a great question.
Oh, thank you.
But I think that it kind of misses a little bit of the point. I think that if we pretended that coronavirus didn't exist, would we be investing in Hong Kong? If we pretended that the protests didn't exist, would we be investing in Hong Kong? I think the answer to both those questions is no.
No, right, yeah.
Yeah, because I think that what is happening to Hong Kong is that it's undergoing a slow but steady kind of move toward irrelevance that will make it a whole lot less attractive as an investment destination over the next 5 to 10 years.
It sounds terrible to be living in a place that's moving towards irrelevance, right? But maybe that's the case. I mean, we can certainly look back at the past 5 or 10 years and see the Hong Kong stock market has been up and down, but largely flat. I mean, a little bit up on a net basis, but year after year, we've seen these articles saying Hong Kong stocks are cheap, Hong Kong stocks might mean revert, but they just haven't. So you're basically saying they won't.
That's right. I think that Hong Kong is increasingly looking more like a value trap
than a value.
Than a value, exactly. It'll just remain a value indefinitely.
Now, you live in Singapore, Kim, and there's been some buzz that a lot of the companies that were going to open up in Hong Kong or are in Hong Kong are moving to Singapore instead, because it's still near China, it's still in Asia, it's got modern laws, and it's just nice. Aside from being a little bit of a Disneyland feel in my view, but it is a nice city. Is that an investable thesis? Should we be looking at Singaporean ETFs instead, if someone's of that ilk?
No, I think that what's happening is, yes, there are some corporates that are moving to Singapore, but it's not something that you, as a stock investor, you would really invest in. You're going to see some increased demand for office real estate and for apartments and condos, international schools, but that's not really going to move the needle for the Singaporean economy as a whole, which is much more geared toward financial services and trade, not to 10,000 people over the next 2 years moving to Singapore.
So great if I'm a dry cleaning business in Singapore, maybe not as great if I'm an global equities investor.
That's right.
So you're bearish on Hong Kong long term. What do you like for international investors?
I think that international investing belongs in every portfolio. What we're talking about just now in terms of a speculative idea, I think that Argentina is a fascinating speculation. Argentina it's kind of like cyclicality on steroids, just because the politics and the economics have combined, and they create enormous cycles. And where we are right now, we're toward the bottom, toward the trough of a cycle. And the cool thing about Argentina is you can actually look at what's happened in the past, over the past 2 or 3 decades, and you can see that every time that the economics and the politics combine and they hit a bottom, they recover, and stock prices go up 3 to 5 times.
So it's not moving towards irrelevance in this case. It's going to recover, you think?
It's going to recover. It's a very small market, and it's extremely speculative. But if you're looking to add some fuel to the fire of your portfolio, I think Argentina is a great option.
Fuel to the fire of your portfolio. Sounds very poetic. So yeah, if you have a high risk tolerance, then don't check out Hong Kong. Kim says check out Argentina. Kim, thanks for being here, and thanks for watching at home.